Although talks between Russia and Ukraine's foreign ministers appear to have ended with no progress, commodity prices are in no hurry to start rising. In general, the situation has not changed. The parties have failed to reach an agreement. Today, markets may seize the opportunity to assess risks and the overall situation in a balanced way. The United States has already decided to ban Russian oil imports, while some European Union member states have favored further mutually advantageous trade relations with Russia in the energy sector. This means that the EU will not refuse Russian gas and oil. However, given that these commodities are one of Russia's trump cards, there is a risk that the country will use them as an instrument for putting pressure on the West. The United States and its allies are stepping up sanctions against Russia. In the light of these events, market participants are trying to take advantage of relative calm to assess the real situation. Oil prices are still trading at triple-digit marks and are unlikely to fall below $100 in the near future. Rather, the asset may well surge again on the news from Ukraine. From a technical point of view, Brent crude oil futures are still in a correction phase. On Thursday, the quote fell below $110 per barrel. Locally, short-term time frames indicate that the asset is oversold. This may lead to a partial rebound in the near future. Overall, oil remains highly dependent on geopolitics. Therefore, it's news that will determine the further dynamics in the oil market. In the foreign exchange market, the ruble continues to fluctuate. In the absence of surprising news, the dollar-ruble pair keeps swinging between the levels of 115 and 130 rubles per dollar. If there are no strong driving factors, the quotes will most likely remain within this range in the short term. Unlike the oil market, it's much more difficult for the currency market to assess the situation. Almost every day, news comes from rating agencies that foresee a high risk of default and cut Russia's credit rating deeper into junk territory. In addition, news about sanctions lead to anxiety in the market. Thus, yesterday, the UK expanded its sanctions list by adding a number of individuals in an effort to affect large Russian enterprises. Besides, Western Union payment system announced that it would stop money transfers in Russia and Belarus from March 24th. Nevertheless, Beijing took an ambiguous stance on the conflict. This could keep the Russian economy from falling. However, China is not in a hurry to provide Russia with support. Against this background, and in the light of growing economic isolation and supply chain issues, the Russian currency has little chance of recovering in the foreseeable future. And now let's take a look at the trading chart. The dollar-ruble pair advanced, consolidated above the mark of 130 rubles per dollar, but then pulled back again. The US dollar correction appears to be over. Therefore, the pair may soon head for new highs. Notably, all recent price fluctuations stem exclusively from fundamental factors, and the currency market will continue to depend on news in the near future. So it makes no sense to focus on technical indicators. Meanwhile, gold futures have entered a deep correction. Over the past two trading sessions, the yellow metal has lost almost $100. This is a fairly significant change in the value of the trading instrument. Judging by its dynamics, it can be assumed that gold will resume its bullish run in the short term. True, in metal, will hardly be able to quickly return to the high posted this week. The volume of short positions suggests that investors are losing faith in gold as a safe haven asset. As for technical analysis, gold futures slowed down their corrective movement in the area of $1,970 per ounce. As a result, the volume of short positions decreased and the metal managed to pare some losses. However, its current movement can hardly be called confident. If the price stays firm above the $2,010 mark, gold will resume its uptrend. Otherwise, the asset may face a period of stagnation. And this was the forecast for the end of the week. Please have a profitable trading day, and we'll see you back on Monday. Bye.